Good afternoon, everyone, and thank you so much for joining us today. I'd like to go ahead and do a quick sound check. So if you can hear me okay, please type a yes in your question or comment box. Wonderful. Thank you guys so much. Jim Crimmins is going to be presenting today. Jim founded Traders Accounting back in the late 90s, and we actively serve traders with entity formation, bookkeeping, and all tax needs. Jim, are you there?
I'm here.
Okay, you're up.
Thank you, ma'am. Hi, everybody. Thanks for being with us today. Today, we're going to talk about one of my, probably one of my most favorite webinars because it talks to the mistakes that I have made as a trader over the years. And I see a lot of old friends on there, and I can tell you that some of those old friends have made the same mistakes. I won't interrupt the program to answer your questions, but I will get them all answered at the end. I see one question has already popped up, and I suspect that question is just going to be recorded. You'll be sent a link later in the week, and you may have to email Raven to get that link. I'll figure that out as we go. Raven, if you're on, help me out here. I guess she went back to doing what she does. So today we're going to talk about the 5 critical business mistakes active traders make. And part of those business mistakes are trading mistakes. And if I can get my computer to work, we'll get started. There's our contact page. If you haven't visited our website, I encourage you to do it. A lot of free information there. That's my email address. If you have questions you don't want to share with the group today, feel free to shoot me an email. I like to chat with people, with traders. Or if you're in Peoria, come see us. What we're going to cover today is the trading landscape, and then the 5 critical mistakes that traders make. We'll then switch over to the business front and talk about what we can do as traders to help us to realize more success in trading. This program was put together by Empire Research Group, a large research group that we hired to do it, and they did a very, very good job. So I don't want to take credit for putting this one together. As a trader, we all know 2 things. First of all, it's very psychological and it's very emotional. And those 2 things, if we can control them, will help us to become better traders. I was reading an article in today's paper about this young man from Spain that recently graduated from Arizona State University and went on the PGA tour. And I guess his emotions have got the best for him. And apparently he threw some clubs. I didn't see it and I didn't even hear about it till today. But anyway, he said something that made sense to me. He can't take the emotion out of his golf game because then he wouldn't be the same player he is. And I suspect we have that same thing going for us with our trading. We can't take all of the emotion out, but we can learn how to control it. And that's very, very hard because it's a game. We have a chart here. We're very optimistic on the left. We start to get excited as the market's going up. it reaches its apex, we're elated, or it's going down. So anyway, we buy, and we're really feeling good about where we got in the market. But it's only a temporary good, because then we have to figure out when to sell. And are we frightened to sell, or have we set up a game plan to begin with that tells us, hey, if we can get into let's just take stocks, for instance. I know you guys are probably trading everything else under the sun, but let's take stocks. If I can get into a stock at the point I want it to, am I going to be satisfied with a profit of 5%, 4%, whatever you think it is? Or am I going to let it run until I think it's time to dump it? Without that plan, in my opinion now, some of you could probably prove me wrong on this, but without that plan of knowing when you're going to sell it, I think sometimes we can run into problems because it devalues normally a lot faster than it values. So we need to have a plan in order to know when to get out of the market. Because it's been proven that making or losing money has a dramatic physical effect. It's like cocaine. When you make money, you feel so great. When the stocks go up twice in a row, you know it's going to just last forever. You have no concern about getting out or putting a stop in. But when one stocks go down unexpectedly, panic can set in real quickly. Do you understand this? I mean, is this something that you experience? It's certainly something that I experience. Setting a stop and having a gap below the stop. Boy, I lost more money doing that than anything else that I've ever done, I think. Financial losses for all of us are processed in the same area of the brain that respond to mortal danger. Now, this was very famous psychologist, and so it must be true, right? We saw it on television, we heard it on Oprah. The harshest reality as a trader, what is it? Making money ain't easy. Years ago, when I first started the company, we were one of the first people to ever sign up to show at one of the Traders Expo in Burbank, California. And one of my first clients called me. He lived in Alaska. I think he lives in Arizona now, not too far from where I am. And he said, hey, let's get together for lunch in Vegas. I said, sure, let's do it. So we went to lunch, and I had seen this guy's tax return for the last couple of years, and he was making a ton of money. He says, well, Jim, this is the last Traders Expo, and I'm getting out of trading. I said, why? You're making good money. Why would you want to get out? He says, because it's the hardest work I've ever done in my life, trying to make enough money to live on. So making money is not easy. The failure rate for traders is somewhere between 75 and 90%. We figure that we lose about 24% of our client base every year because they've dropped out of trading. But you've got to realize they didn't all go broke. Some of them decided they didn't like it. Some of them decided, well, some of them got a good job offer they couldn't turn down and they don't have the time to trade. And some of them lost money, so they got out. The Wall Street Journal indicated that they'd be surprised if 15% of day traders are profitable. Now, I think that's way low. I know it's certainly not 100% of day traders are profitable, but I would guess an active trader that has has put his trading business together and done the things that he or she needs to do is probably profitable. And I'm not saying way profitable where he's going to buy that palatial mansion, but at least profitable rather than unprofitable. There's a very small line between success and failure. Now, Charlie Wright is one of my favorite authors when it comes to trading. I'm going to use him several times in this. In his book, The Principles of Successful Trading, he says it's not the prediction or the greatest indicator that makes you profit in trading, but rather it's how you apply sound trading discipline with superior cash management and risk control that makes the difference between success and failure. Sound trading discipline. That's what I was talking about before, that you have a trading plan and you stick to it. Women do that a lot better than men do. Men seem to always want to tinker around with things. But if you've got a trading plan that works, why not stick with it? You don't need to go out and hit 60 home runs. 20 home runs will keep you in the major leagues for a long time. So if you've got a plan, stick with it. Know when you're going to sell. Know when you're going to buy. The 5 critical mistakes that Empire feels that traders make. Number 1 is overconfidence. Oh, yes, 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 yes. Number 2 is the failure to create and follow that plan that I keep hammering you about. Number 3 is not taking the time to manage your business. I'm going to say number 2A or number 3 above 3 is the fact that you've got to realize that if you're trading for a profit, that's the definition of a business. So whether you want to believe it or not, if you're actively trading and you're doing it to make a profit, pal, you're in business. But now you need to take time to management. And managing a business, managing your cash flow, it's not easy. It's not as hard as trading, I don't think. And there's a ton of help that you can get in doing it. So you need to learn the business basics. What is cash flow? And you need to build a business team. We'll go into all 5 of these throughout the presentation. Number 1 is a trading problem, overconfidence. I talk to a lot of newbie traders during each day. And one of the things that I want to tell them is that they're not going to go into trading and make $1 million in the first year, because many of them have gone to a trading school that has convinced them that they're going to make 100 to 200% a year. I think they'd be very lucky to make 5% in a year. Now, some of you undoubtedly have proven me wrong in that. But for the first year of trading, I'd be very happy if all of my clients could make 5%. But most of them coming in are overconfident, and you cannot take that away from them because they need confidence. They just don't need overconfidence. Because overconfidence leads to failure. Overconfident traders overtrade. They're afraid not to be in there trading all of the time because they know if they are, they're going to miss something. They fear missing opportunities more than they fear losing money. And this is thanks to Brent Steenberger, who's an associate professor of psychiatry at the Upstate Medical University in Syracuse. So, overconfident traders overtrade. Well, how do you keep from being overconfident? How do you arrive at the right area? That's probably a question that we could sit on top of a mountain in our moo-moos and smoke our whatever and discuss for years. My thought, and this applies to me, only to me, is that if I can sit down and write out a plan for my trading based upon what I have learned over the years from both my trading and from talking to really great people that I talk to that are mentors and teaching classes, and then if I can stick to that plan, if it works, I can probably thwart my overconfidence, because a trader loves to trade. That's what you do. But you can't make every trade. Every trade is not going to be successful. It's just going to drive you as crazy as this picture that you're looking at. The overconfident trader take a lot of credit for their success. I'm reminded of the early years in this century when all of us, and some of last century, when all of us could make any trade we wanted to. It didn't make any difference. It was going to be a success. Throw anything against the wall and it was going to come off in money. And people really thought that they were the greatest traders in the world. But guess what? The market switched. And all of this ability that they thought they had was no longer there. And a lot of them really went belly up because they had never learned to trade. They were just making money no matter what they did. I'll let you read these as I put them up. Okay. Overconfident traders typically end up losing it all. And we all have a lot at stake. You know, as a trader, we're comparable to entrepreneurs who are thinking about going into business, because that's what we've done. We've taken our money and invested it in a brokerage account or more. An entrepreneur takes his money and invests it with a franchise, or invests it, you know, in some sort of business, maybe real estate. But we take ours and put it into trading. 53% on average take their life savings and put it into their business. Many of these traders become overconfident. They fail to manage their business property. And I'm going to tell you, there are some really good trading schools out there, and there are some really good mentors. And you guys have probably found them, but you've also probably found the opposite of that. And that's really a shame. We have trading schools in this industry that are convincing people they're going to double their money in the first year that they've ever traded. They never traded before in their life, and now they're going to double their money. And the only reason they're doing that is to get them to sign up for the next class. It's absolutely stupidity. It would seem to me that if these trading schools were a little more honest, they could probably build a lifetime client out of that trader. Okay, I'll get off my pulpit now. Traders, especially those starting out, don't even realize they're in business. They're really good at keeping tabs on the market, up and down, what did Dow do today, what did this do today. But because they spend so much time on the markets, they don't have a clue how to manage their money. It just doesn't exist. I call people, and I know you've heard me say this before, but I've called traders in November saying, hey, how you doing this year? Well, I don't know yet. Well, man, if that's an honest response, how is that trader ever going to be successful if he or she doesn't know how they're doing? Because if you're not doing well, what do you need to do? You need to make some changes somehow. And if you're doing good, you ought to pile it on, but you ought to know it. Not wait for your accountant to tell you in March how you did the previous year. If the 15% that the Wall Street Journal said are profitable, the bear market is not their only concern. The other reason, they don't realize that they're in business. And I suspect, we've got a lot of people on here today, I suspect there's a good percentage of you on here that are saying, no, I'm not in business. I'm just trading. It's a hobby with me. Well, that's a shame. That's a real shame. Psychologically, it's even a worse shame. Because if you would recognize that you're in the business of trading, you would probably not have any stop gaps that would allow you to make excuses for any money you lost as a hobby. Because in business, when we lose money, we damn well better start searching about why we're losing money to make that change. And as a trader, I'm going to tell you now, if you're losing money, there's something wrong. Try to figure out what it is. Get a good mentor. I can't say enough about good mentors. Get a good one and try to figure out. It's just like a golf pro. I was listening to Phil Mickelson the other night, and he's always talking about those golf pros that he's got around him that are helping him make the decisions. Now, here's a guy that's won more money than most of us will ever have on the PGA Tour, and yet he still uses, after 30 years on the tour, coaches to help him decide what is going well and what is not going well. So, please, if you are an active trader, recognize that you're in business. Number two, many traders get so wrapped up in trading, they have never created a plan. They didn't go to a trading school that pounded into their head to get a plan and to follow it. And most fail to understand that trading is a business. There's a lot of things to consider outside of trading. If you're going to be in the business of trading, does it make sense to have an entity to trade out of? And if so, what kind of an entity? Your cash flow. I'll tell you, as a trader, once our cash flow goes negative, we're out of business. We need to understand taxes, especially now, folks. I'm going to tell you, this new section 199 in the tax code is going to create a lot of problems for people, as well as a lot of opportunities for people. I'm putting a presentation together that I hope to have in the first week of October. on Section 199. And if you're not familiar with the section number, it's the section that says, hey, if you're a small business, the first 20% of the money you make in a year is not taxable. Well, don't believe what I just said. There's a lot of other things to consider. So you need to know what they are. It's going to affect your cash flow. You need to understand your revenue. When is it coming in? Now, a lot of it is guesswork. I will be the first to admit. But then, hey, if it's guesswork, how did our friend in Omaha become so successful? Is all of his guesses? Or does he just have the manpower to know when the market's going to tip one way or the other? One of the biggest failures for traders or any business is the disregard of the business aspects. Many people, entrepreneurs and traders, build their companies on a house of cards. They get the wrong business formation because some corporate puppy mill has told them, hey, what you need to have is a LLC set up in Wyoming. Well, first of all, I don't know whether an LLC is the right one for you to be the most tax efficient. But if you live in Wisconsin, I don't think Wyoming is the best place to set it up. They don't do any bookkeeping or have any accounting procedures. Very important to know where you are. They haven't figured out that as a trader, if they're in business, they can have a retirement plan for themselves, donate money to it out of their trading profit, and lower their taxes. We have so many traders that file their taxes wrong. If you trade futures or Forex, you might want to talk to us about looking at your tax returns, because we find a good 50% of them have been filed incorrectly, and it's cost you a lot of money. They don't know those things, and then they wonder what went wrong. This is the National Business Organization that says 82% of business owners who went out of business had poor cash flow management skills. And I would say that that same percentage surrounds traders. 63% lack critical experience in regards to running a business. Do you fall in this arena? You know, I don't know. The missing piece to the puzzle is putting your trading strategies together with business management. Now, here's another thing from Charlie Wright. A great indicator does not make a successful trader. I can give you the greatest strategy in the world, but if you can't trade it and you don't know how to manage your cash flow, you're going to still be unsuccessful. I can't tell you how many traders have told me they are losing money trading profitable strategies. Mistake number 3, not taking the time to manage the business. Well, especially you currency traders, this is for you because you guys are up all hours of the day and night trading. And as long as you're trading and that's what you're good at, you don't have any time or energy to manage your business. So your priorities are a little bit out of line. Like I said, many traders still trading after the closing bell, and you don't have to be a Forex trader to do that anymore. It says some, I'm going to say many traders dedicate all of their time to reading fundamentals, checking the news, and looking at charts. Now, why is that? because all of us have a series of core competencies, something that we're real good at. Now, I consider myself real good at working with clients. So what do I like to do? I like to work with clients. When I get up in the morning, it's, oh boy, I wonder what today's going to bring me in my conversations with my clients. But if I spent all of my time doing that, could I be successful in business? Probably not, because I need to know a lot more things. Like right now, how is this latest market turned down and I haven't looked at today? How is that going to affect my business? How is that going to affect your trading? Did we see it coming? Should we have seen it coming the minute Trump said he was going to put tariffs on all of these countries? Probably. I'm not sure that I did. I knew something was out of line, but I got caught up in the hyperbole, and so I didn't even think about it. My priorities were out of line. If you fail to understand the daily management manage your business, you're probably going to be unsuccessful, because when you disregard it, something is gone. Many traders start their business with inadequate capital funding. Well, it's easy to get into the trading business. You don't have to have much money, particularly if you're going to trade futures or Forex. You know, stocks and options take a little bit more money, but it may not be enough to get you through the process of losing money, breaking even, and then making money. So if you don't have enough capital funding, and who do you ask if you've got enough? That's a great question too. But if you don't have enough, what can you do? Well, there's several alternatives that you might be able to do. Now, the next thing that really causes me heartburn is that business education is sought through the wrong individuals or from sources who do not specialize in trading. Every week we talk to one or two clients, not clients, one or two people that have set up a business that is going to cost them money over the years because of the way it was set up. And I'm particularly talking to those people that live in anywhere but anywhere but Nevada, and then they set up an entity in Nevada because that's what they're told. That's the wrong business education, because you've talked to somebody that may say they're specializing in the business of trading, but find out, do they do tax returns for traders? That's where the rubber hits the road. Many traders have no idea how to manage and increase their business cash flow. And there are easy ways to increase your cash flow. It just takes you making a decision. Talking about brokerage fees and commissions. One of the things, if you're not being successful, do you have the right broker? Or somebody's been trading options and now all of a sudden they're going to go trade Forex, and they find out that the broker that they've been trading options with also supports Forex. I don't know if anybody does. And they stay with them. That may or may not, probably not, be the best thing you could do. You need to have somebody that specializes in Forex. Here are all sorts of questions about brokers. Take a minute and read them. Back to core competencies. I snuck a little bit in on you before. Core competencies are very, very important to understand for all of us. They're the specialized traits each of us have to be successful at something. You know, all of us can be successful at something. I watched the movie Forrest Gump again the other night. If you haven't seen that recently, or if you haven't seen it, you ought to get it. Here's the guy that didn't know he was successful and was completely successful. But we have to take our core competencies. And if it's trading, that's great. But then you need to surround yourself with somebody that's going to help you with the business. And this number 3, if you're a good trader in stocks, you may not be as good a trader in options. I'll take myself as an example. I've been trading for many, many years. I still don't understand options. And you know, I used to tour with one of the best in the world, Tom Sosnoff, and I used to do seminars together all around the United States. And he just couldn't understand why I couldn't understand them. I can't understand them. Same reason I probably had trouble with geometry in high school. My core competency is not options, I can guarantee you. But I talk to traders, and when I ask them what they're trading, they say, oh, stocks and options, a little Forex and some futures. I'm not sure that makes sense. If you're successful, I guess it does. But I think you ought to try to find out what you're the best at. And then stay with it and learn and learn and learn. Mistake number 4, failure to learn business basics. Again, there are people listening to me right now that do not believe they're in business, even though they're trading on a daily basis and they're trying to make money. And that, I can't think of a better definition for a business. Traders need to understand that they're in the business of trading, especially with the new tax law. And let me not leave you hanging there. The new tax law has taken hobby expenses and completely trashed them. It used to be that an investor or somebody that was not trading as a business could take a few of their expenses. Not anymore. So your primary responsibility as a trader is to manage your cash flow. Of course, trading comes into that. The better trader you are, the better positive cash flow you're going to have. So if your primary job is managing your cash flow, then a subset of that is to become a better trader. A subset of that is to become a better business person, because it's going to affect how successful you are and how well your business is run. What's your biggest expense? Now, those are the easy for you to say. Those of you that have heard me speak before, you know what it is. Your business expense, big business expense is taxes, whether you make money or lose money. If you make money, well, you know that the IRS is after you to pay bigger, higher percentages. When you lose money, because of the way the IRS has structured the rules around the reporting of taxes for traders, you're only able to deduct $3,000 a year unless you've made the mark-to-market election. But The mark-to-market election doesn't make sense for everybody. In fact, it will hurt some people more than it will help them. It is not a panacea. So part of understanding how to manage your capital, how to manage your cash, is what do you do with that expense? The way you form your company affects your taxes. There are only two tax codes in the United States. One is for individuals, one is for businesses. They're both legal. Anyone can use either one as long as you qualify as a business. We all qualify as an individual, although, well, just let me leave it there. So if you qualify as a business, the company formation that you select is going to improve your taxes. Let me just give you one example. Now, I know a lot of people really trash corporations, C corporations, right? Let me tell you, sometimes a C corporation can be the most tax efficient way for you to trade. Why? Well, 21% tax rate, number one. Number two, medical reimbursement plans. If you got anywhere from $5,000 to $10,000 a year in medical expenses for you and your family, hey, let the corporation pay for it and deduct it as an expense and repay you the money that you had to lay out of pocket. There are two good reasons. There are 4 or 5 very good reasons to use a corporation, but that's just an example. An LLC is good for some people. An S corporation is generally not very good. It'll probably cost you a lot of money to trade in an S corp. I think that says it all. When in company formation, there is no cookie cutter approach. Now, you can trade as an investor, or you can go into the business of trading, which would include filing your taxes as a sole proprietor, as a C corporation, as an S corporation, as an LLC, and as a limited partnership. Now, the first thing I want you to understand that no matter what anybody has told you or told you in the past, there is no cookie cutter approach to this. Everybody's different, and everybody is going to have a different need. So the reasons that you would select an accounting firm that knows about traders' taxation is to get help with something like this. If you're going to trade as a business, and I highly recommend it with the new tax laws, which one is the best for you? You got a lot of choices there. And that's part of running your business, picking the right one. Because I talk to people every week that have gone ahead and tried to set them up on their own, not knowing all of the questions that they needed to ask. Some of them get the right one, some of them get the wrong one. The IRS considers any trader who does nothing to improve their tax status as an investor. And investors are really low on the food chain. Now, that said, some of us don't qualify to have a business of trading because the IRS has made it tough for us to qualify. You have to hit certain plateaus in the amount of trading that you're doing. But if you reach that plateau and you're trading at that level, you seriously need to consider which business is going to be the most tax efficient for you. But investor tax status is really low on the food chain, particularly now with the new hobby rules. They're always going to be subject to the $3,000 loss rule. If they're trading options or stocks, they're going to be, well, and cryptocurrency, going to be subject to wash sales. Expenses that are to be deducted, there's none of them anymore, folks. Forget it. Most expenses are not deductible because they're considered hobby expenses. And I haven't researched this, but in the past, margin expenses were only deductible if you made money trading, and only to the extent that you made money. So investors give up a lot of write-offs. I'm just going to list them here, and you can read them as I put them down. Out of 1,000 prepared taxes, legitimate write-offs for traders total between $12,000 and $20,000. A $20,000 write-off at a 30% tax bracket will put $6,000 in your pocket or back in your trading account. That is tax efficiency. A business team. I've talked about core competencies, and the problem is we all, as we're going into business, think that we can do it all. That's part of the mindset of somebody going into any business. If their accountant sits down with them and says, well, what about this? Well, I'll do that. And what about that? Oh, well, I'll do that too, until I get the company up and running. Well, unfortunately, there's only 24 hours in a day. And the thing that seems to suffer the most to begin with is the accounting part of the puzzle. And once you get behind with your accounting, let me tell you, it's a pain in the butt to get it caught up if you ever do. And if you don't, then you're going to file bogus taxes. So as a business team, I highly recommend that you have a mentor, a trading mentor, that you have a great brokerage, that their way of doing business fits your way of trading. And I highly recommend that you have an accountant, someone that you can go to, because throughout the year you're going to have questions. And if you don't have time, or your family doesn't have time to do your bookkeeping, I would talk to that accountant about doing your bookkeeping, because then you will always know where you are. And that is so important in case you need to make changes. Without this mentoring team, you lose the advantage of your trading mentor's ability to help steer you in the right direction. You can burn all of your cash, and it's a business-ending mistake. And most of us don't think about it, but the ramifications of not managing our cash flow is being forced to go back to work in corporate America. You can become a greeter at Walmart. Once you do that, you've lost your psychological edge. I've always liked that quote. I hope you do. There's different strategies for individuals who want success. Those individuals that want to create a stable, financially secure trading business, to be winning at trading, to have a high quality lifestyle and a good balance, which is important. If you're trading 18 hours a day and sleeping 6, you've got no balance, and you need balance. Believe me, you've got to figure out a way that you're only spending 6 to 8 hours a day on your trading. You need to create your business plan and know how you're going to trade to meet it. You're going to need to schedule time for webinars like this. You're to be congratulated for taking time to do it today. Learning how to manage your cash flow, knowing how to find available trading funds in case you need them, and build that team that I was talking about, a mentor, a broker, and an accountant. Trading, as I said before, is a very low barrier business. Many people just start with a computer and a broker and some investment. But you have to be disciplined with solid business management skills to survive in the trading. And a change of mind is generally required. As Charlie Wright said, once I realized that trading was not easy money, my trading improved. Once I realized I had to make an investment in the business, both in terms of my own education and in equipment and working capital, my trading improved. My mantra has been always, it's sure a lot easier to trade with more money than it is less money. Step number 2, schedule the time to work on your business. Be careful of where you're getting your financial advice. The internet's a wonderful thing, and it's a horrible thing. You'd never know who you're talking to on the internet. So, I use the Wall Street Journal for most of mine, and then some accounting teachers that I use almost on a weekly basis. But there's a lot of people. Some of them aren't so good. MSN Money, I don't even know if they're still around. They advise people down in the late 90s, the early 2000s, hey, don't pay your quarterly taxes. This was traders. You can use that money and make a heck of a lot more money than you can if you don't use it, and the penalties and interest are very low, so you'll make more money than that. Well, yeah, that was fine. One of my clients was making a ton of money. Then March came the following year, the market fell out. He lost everything that he had. He hadn't paid his taxes from the previous year. Now, how can he trade? First of all, he's got no money. Secondly, he's worried like hell because he can't pay his taxes. As I said when I started this presentation, trading is a psychological business. Unless you've got a clear mind and no worries, it's very hard to be a successful trader. So be careful where you're getting your information from. I find this very funny. According to a study, active traders typically don't like reading books. Attending webinars is a much more popular form of self-education. It is. And let me drop the hammer on webinars, and I'm dropping it on my own. Unless you know who's given the webinar and their background and their success ratio, be careful. Be careful. But whatever form of education you like, you ought to use it to learn more about business if you're going to be a trader. Figure out what your core competencies are. Utilize them. Again, there's no cookie cutter approach to setting up the proper company to trade in. No matter what somebody's told you, don't believe it. But if you're going to be an active trader, you need to very seriously consider a company to trade in. And then you need to understand or have somebody on your team that understands the importance of tax timelines and mark-to-market accounting. Keep detailed records or have your bookkeeper do that. And obtain specialized help in these critical areas. Now, Traders Accounting, we give you a free consultation to work together to decide what would be the best tax savings entity for you to utilize. And then we have a great bookkeeping department that will help you understand tax timelines. Our coaches will help you understand mark to market. Is it something you should do? The bookkeeping department keeps the detailed records for your trading. And then we do the taxes for you at the end of the year. That's the kind of management team you want. A successful trader has good analytical skills. He or she avoids overconfident trading, understands their own core competencies, and realizes it's important as understanding your core competencies is understanding which ones you're not very good at and owning up to it. Then using knowledge and education to help you become better at your core competencies and find a mentor. And then the business model, increase your business skills through education. Investigate company formation. That's why we offer that free 30-minute consultation, is so that and it's free. I invite you to do it. Target your biggest expense, taxes. If you're trading as a business, you have all of these deductions for business expenses. And they can mount up very, very high, which will help you increase your cash flow. It also will help you overcome any liability issues, asset protection that you have, if you're in the right entity. The bottom line is what matters. The bottom line is managing your cash flow. Your success team and the team, what would it look like? It's a team that's going to be dedicated to helping you succeed. Well, who is Traders Accounting for those of you that don't know? We're professional tax advisors specializing in active traders. Our products and services provide a comprehensive method for building and operating a trading business. We minimize tax, reduce liability risk, and provide wealth building and preservation opportunities through education, entity formation, bookkeeping, tax preparation, and pension and retirement funds. I'm embarrassed because I hate to talk about myself, but we've been in business for over 20 years now. It's close to 25. We're specialized in helping traders, and we can manage the back office for you. A couple people you may recognize their name. And here's my buddy Tom Sosnoff. He's quite a guy, made quite a success of himself. I want you to take advantage of our free offer today. I want you to call that number that's on the screen and set up your free consultation. That's whether you've already set up a business, no matter who you have set it up, let us look at it and see if we agree that it's the best. If it is, we're going to tell you it's the best way you could have gone. If it isn't, we're going to say, hey, look at this, and this is why you should have a different business. Where was it set up? Was it set up in Nevada? Well, that's costing you a ton of money that you could be trading with. I've always found that it's easier to set one up in the state that you live in. Now, there may be 3 states that I don't agree with that with. One of them's going to break in thirds here pretty quick anyway after the election. But please don't procrastinate on this. It doesn't cost anything except 30 minutes of your time. Call us at 800-938-9513. That's pretty cute how that does that, isn't it? I'm going to go back. I want to see that again. You trade, we'll do the rest. Zoom, here it comes. Call 800-938-9513. Now, our next webinar is going to be on Wednesday, July 11th. We won't have one next week. 6 o'clock Eastern Daylight Time, same time as this one was. And it's going to be all about cryptocurrency. If you have traded it, if you've just dabbled in it, or if you're thinking about it, you damn well want to look at this. I have spent the last 3 weeks working with some outstanding people who understand the code a lot better than I do. And all they're telling me is that, hey, people that are trading in cryptocurrency may be in for a big surprise. So anyway, register for that July 11th one. Now let us take your questions. If I can get there and find the question box. Okay. Earl says, I'm having problems with my PC. Will a recording be available? Yes, it will, Earl. And since I couldn't get Raven to answer me,
I'm here.
oh, do they have to call in or write in to get a copy of the presentation, Raven?
If you guys can email learn, LEARN, at tradersaccounting.com and just request a copy of the recording, I will get it out to you right away.
Thank you, Raven. Harmet says, is it a good idea to trade futures, Forex, and stock options in the same account with mark-to-market accounting? Probably not, Harmet. I think I covered that. You can be trading too many things, and your core competencies probably aren't all 3 of them. Do you have recommended lists of good trading schools? No, we don't. Is the fact that a limited partnership is antiquated viewed as a negative? Simon, no, not at all. That's what I started trading with, and it's still okay. An LLC is better if you were going to set one up today. I can't believe that I don't have more questions than this, but I guess that's all. So I really appreciate your being here. Hope to see you on the 11th. We're going to talk about either cryptocurrency or psychocurrency, however you look at it. Bye-bye now.